morning, traders. Today is Sunday, December 18th, and I bring bad news for the bears. Guess what? The VIX has the death cross, meaning SMA 50 has crossed below the SMA 200 daily chart. But don't take my word for it. I'm not the only one talking about that. Other outlets, such as Yahoo Finance, are saying the same thing. But I'm not going to talk to you about the death cross today. I'm going to talk to you about the death knell for VIX. And I'm going to prove to you across 5 time frames, monthly, weekly, daily, 4 hour, 1 hour, that the death knell has rung. I can hear it now, guys. I can hear the bears clanking on the keyboards, furiously clicking the unlike on this video. Okay? But actually, I have an invitation. If after what you see here today, you still think we're making the next leg lower, I want you to tell me exactly how. Don't just say the what. The what is we're going lower. The what is we're making the next leg down. The what is we're going to crash. I want you to tell me how we're going to crash. I want you to leave a comment. How are we going to crash? What is it about the VIX that convinces you we are going to make the next leg lower in the markets? Okay? But before I get into the VIX death knell, I'd like to set the record a little bit straight. So I understand if newer viewers who recently joined think that my forecasts have been wrong lately. But what I'm showing you right now is I posted this on November 17th, as you see here, a month ago. Today is December 18th. When the stocks channels on YouTube were still fixating on the downtrend, I identified a secret channel, the uptrend. Okay? That was a month ago when I posted it, when I realized what was going on. Everyone up until that point was still focusing on, you'll see another slide on this, still focusing on this August peak downtrend right here. You'll see another slide on that. Nobody was talking about this right here that started as of October 13th low. But the plot thickens. There's another relationship that I see related to the October 13th low that, to me, based on Friday's close a couple days ago, more solidifies that pattern that I see forming now. Okay? So, to potential viewers who have said, I have been wrong. Have I so far? We're going to find out. But I'm going to say, as of a month ago, November 17th, I identified that upward channel that we have been in so far for this entire time, ever since I posted that November 17th video. Because what I'm about to show you is, even with Friday's close, we're not out of a channel yet. That's going to blow your mind. Okay? Here's the same slide that you saw a moment ago on the left-hand side. How did I do after November 17th when I posted it? Point of reference, here's on November 17th. That's November 17th. We stayed in that channel well past Thanksgiving. Right? This was Thanksgiving right here. We stayed in that channel all the way till essentially the first week of December. See that? So, was I wrong? No, I don't think so. Not yet. Okay? Now, let's move to the next slide. Okay, this is through today, what you just saw on the right-hand side earlier, a moment ago. I've been calling for Santa Claus rally now for, oh, it's been maybe coming on 2 weeks now, I think. I've been calling for strength. I see strength in the markets. Okay? Now, as of 12/13, that was kind of hard to see. 12/13, CPI, that was Tuesday. That was Tuesday. We hit new highs we have not seen since September. On Tuesday of this past week, we hit new highs we haven't seen since September. So was I wrong? Was I wrong? I said there's strength here. We're going to rally. Okay? Now, here's a question for you guys. If at the time that I posted that video on November 17th, if at that time you had not considered that we were in an upwards channel, is it possible that you are still not considering that we are still in an upwards channel? Only that the channel has now expanded. It was right here. See that? It was right here. This is equivalent. And now it's officially at the 1013 low. It wicked down. Remember that? See that? I'm still drawing the same uptrend top of the channel. I haven't changed that. Have you considered the fact that this entire time we were at the upper end of the channel, flattening out, and now we are at the lower end of the channel, which aligns perfectly with the 1013 low, wick low. Not the close. Obviously, the close was way up, but the wick low went way down. You guys remember that? Down 500 points that day on CPI 1013. I remember that because I was shorting it. I was shorting it from the night before. All right. So this blue line is when everybody and their brother were still fixating on the August trend line. But all the while, since 1013, the markets have secretly started an uptrend. And now, looking back, it's quite possible that uptrend was always from this 1013 low as the channel bottom that we have kissed perfectly on Friday. We have been at the channel top all this time. Now we're just going horizontal, and now we're at the channel bottom. And as of this week, look at that. 12/13, Tuesday. Kiss the top of the channel perfectly. 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 I've drawn this channel top now for how long? Right? And that top perfectly aligns with 913. 3 months to the day. Is that an accident? I don't believe in accidents. So you see now, is it really over? Are we really going to crash? Really? Because as you see here, and now I'm going to zoom in so you can just see it better. As a fellow viewer correctly points out, this is this orange, a peachish orange shade is the Bollinger Band. We are now on the outer edge of the Bollinger Band. Guess what happens when that happens? Just like we were out of the edge of the Bollinger Band here. Rip it the other way. You got to get back to the mean. You guys know outer edge of the Bollinger Band is beyond 95% or 2 standard deviations of the mean. 95%. You are outside of the 95th percentile. If this trend holds, if this was in their plan all along, this lower channel, 1013, then the markets are hitting a major, major resistance line. And they are overextended to the downside. 2 standard deviations of the mean per the Bollinger Band. You think they're going to snap back? I think they will. I think they will. And you think the VIX is going to stop them? What I'm about to show you next, a reasonable person is going to conclude, maybe not so much. I don't think the VIX is going to stop them now. Here we go. Let me zoom back out. Monthly VIX. Noteworthy. January through November, the first 11 months, candles have closed. Candles open and close above the EMA SMA. See that right there? For the first 11 months of the year, all year, candles have closed above, or at least the body has straddled the line. Okay, right? Fair. That's a fair observation. But look at December. So far, that body has now hit the EMA SMA resistance line with a big wick down. Big wick down, selling pressure on the VIX on the monthly. And now the body cannot. So far, we are heading into the 3rd week of December. So far, it's not been able to break the monthly EMA SMA lines. They're serving now as resistance. And here's a bigger problem the VIX has. Look down on the MACD. You know I love the MACD. Now you have clear separation. That's not good. You guys heard me say in previous videos, hourly and 4-hour videos, or the hourly and 4-hour time frames, I'm sorry. You generally have a 90% retracement from your starting point. Let's just say it's even right here. Okay, I'll just even give VIX the benefit. I'll give VIX the benefit of the doubt. Well, guess where you're going, bud? This is the monthly, guys. Oh, you're going back down. You've already separated from the signal line, and now the separation is getting bigger. You're going down. Look at the weekly. Weekly rejection. Uh-oh. Boop. EMA, SMA. Wick down. Red candle. Rejected at resistance. Uh-oh. That's consistent with the monthly getting rejected. And now look at the weekly MACD. You are now right at 100% retracement from your starting point, and you're angling down. Are you going to tell me VIX is going to surge and we're going to make the next leg down in this formation? That's pretty tough to believe that. So now you have the monthly separation, and you're going to retrace to about here, about down here. You have weekly rejection, EMA, SMA. You are now at 100% retracement, and you're angling down. Skip over to the daily. Wick down, wick down, wick down. Somebody's keeping VIX on a wrap, guys. They're not letting VIX surge. They're not letting VIX surge. VIX already tried to cheat fate earlier by gapping up. See that? See right there. Gap up. Because we all know it didn't have the strength per the monthly and the weekly. It lost the EMA backtest line right here. Down you go. Now you're trying to come back up, but you're getting wick down, wick down, wick down. You're getting pushed down. Look at the histogram on the daily. Down, 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 down. Are you telling me it's going to keep going up? Like this? Is this what you're hoping for? Right here? That's probably what you're hoping for. That doesn't look like that to me. This is the daily. Look at the MACD already curving, and you're well below the zero line. That doesn't look like you're ready to rock and roll to me on the daily. Like you're ready to surge to bring us to the next level down. Let's skip over the 4-hour chart. Gap up. Uh-oh. Look at the 4-hour chart. Already separating from the signal line as of Friday. You didn't even touch the signal line. You see that daylight there? You're already curling down and now you're separating. And I still contend, because the 4-hour chart and 1-hour chart always proves this to be true, your ultimate destination is here. You're curling down to here. I have said in previous videos, it's never a straight line. As you saw here, this little uptick, yeah, but I'm going to go down. You're losing power on the 4-hour chart. The daily doesn't look strong. You just saw the monthly and the weekly looks weak. Separation, heading down. So that's the 4-hour chart. Oh, now we're at the 1-hour chart. And I've been saying all last week, here's the screenshot. I've been saying this, I've been saying this. I see weakness here. I don't see strength. I've been saying this in previous videos. And I'm going to say it again. 1-hour chart. Uh-oh. This is as of Friday, guys. Uh-oh. Major separation from the signal line. Now you're kissing the zero line. And you're going to have at least a 90 retracement from your starting point. There's where you're going. So, my invitation earlier from the bears. Tell me how the markets will be taking the next leg lower. Don't just say what. Tell me how it's going to happen. When I've just shown you pretty compelling evidence from 5 levels of time frames, starting from the highest of monthly on down to the hourly, that the VIX is not in position to surge at all. We could talk about, the the death cross, but this looks to me like the death knell. Okay? So, there you go. We have what I believe to be the true patterns emerging that the market makers have been designing all along since 1013. It's an upward channel, and we're at the bottom of that channel. And being 95% on the outer Bollinger Band, combined with the VIX looking like this, tell me how. Tell me how we're going to make the next leg lower now. We are now in major resistance in that upward channel. Oversold conditions gapped 2 times last week, gapped down 2 times last week. The markets have every incentive to continue to go up, not down. Food for thought, guys. Leave comments. I'm eager to hear how you think we will be making the next leg down. Not what you think. Tell me how. Look forward to your comments. If you'd like to hit me up on Twitter, where I make real-time updates during the day, please do so. Please give it a like, share, subscribe, or click to be notified. And with that, I leave you until tomorrow. Agent 000 signing off.